All right, Yola, welcome to Crypto Biz Media. Tonight, we'll be talking about price action. We'll be talking about price action tonight. When you hear people say, I'm trading with purely price action, that is what we are going to be looking at tonight. I'm going to be teaching you and walking you through how to master price action so that you can be able to do this simple trading strategy of price action yourself. Price action, what it is, and then how to use it to trade. I'm going to be teaching you price action. So when we started this whole deep and downward movement, I was saying it. I even made a video, a YouTube short about it, that the best way for you to profit in this kind of market is when you short bounces at lower high. Most of those bounces in a bear market are always weak when you see that there are not enough volume with them. And I know that a lot of people have been profiting with that strategy alone. No downtrend forms lower lows and lower highs when you're in a downtrend. Now, in a bear market, if that downtrend mistakenly gives you a relief pump, you know that that relief pump is not strong. It is not strong. You are definitely shorting it. I think the last I checked, I saw Bitcoin at 28,000 now, but that was around in the afternoon. I can't even remember the current price right now. But guys, it is there. It is definitely there. As the market is consolidating, I know that market is trying to like consolidate and all of that is forcing, is not really giving you a clear path of lower lows and lower highs. But man, crypto traders have been making profits, shorting that top of the resistance, that top of the resistance. You know, there's actually a secret whereby it's actually a trading secret. A resistance that is going to break, the price is just going to break through it. It won't consolidate at that resistance. But many times when the price wants to bounce back to the support, it's going to have this small consolidation at the top of the resistance. And that alone has been making traders profits. You see, all those things I'm explaining to you right now, what I just said right now, that is price action. That is price action. Honestly, guys, price action is a very large topic in cryptocurrency trading. It's a very large topic, and I'm going to be touching some part of it, the most important part of it in tonight's session. So you guys should make sure you stay tuned so that you can enjoy this class and then also learn from it. And then I implore everybody that after this class, that you actually practice what I'm going to be teaching you guys in this Zoom session. So you actually practice and try it out yourself and see how it feels and looks like. Crypto Biz Media organizes sessions like this every Saturday, every good Saturday. We organize sessions, Zoom sessions to make our to help our viewers to be more profitable in the market. It's just like a guide, honestly, to you guys. It's just like a guide. People that have been coming to our Zoom sessions often and often know how these Zoom sessions have been helpful, because you know there are sometimes we just pick on topics that relate to what is going on currently in the market. Now, okay, so first of all, what is price action? What is price action? What do we know as price action? Now, I'm going to read a definition according to Investopedia. Now, this guy said price action refers to the patterns or character of how the price of an asset behaves, often in the short run. Price action can be analyzed when plotted graphically over time, often in the form of a line chart or candlestick chart. Now, simply put, that price action is how a price of an asset behaves and the study of it to make trading decisions. Like, that's the most simplest definition for it. You know, human beings, we also have a way we behave. Now, the behavior we are talking about here is the behavior of the price of the assets that you are buying or you are selling. So, Bitcoin, for instance, is an asset. The way Bitcoin goes up and goes down, the behaviors of Bitcoin, that is the price action. That is the action. That is what Bitcoin is doing. That is what the price action basically is. And then I'm going to go more in depth into this. Now, I just want to take this introduction quick, so that I get into the real deal faster, and then we conclude this meeting. Let's say at most by 8:40, we should be able to conclude this meeting. And then I hope that everyone learns a thing or two. Now, okay, now, what then is price action trading? Now, we already know what price action is. We know it as the behavior of price, how price behaves when they get to some certain levels, you know, stuff like that. Now, what then is price action trading? Price Trading with price action means trading on what you see on the chart. It might be a pattern that you see, then you decide that that is your reason for buying long or selling short. It can be a structure, it can be a breakout, it can be all of that. That is what basically price action. It's just like we are trading on what the price is doing. Now, because you saw that the price moved this way, now that movement of that price is what is making you decide on what to do next. Now, when you see a price forming a double bottom, you feel okay, double bottom is a bullish pattern. I think what that price just did there is that it just told me that it just is about to go bullish, and then you begin to long the market. That is what price action basically is. It is getting your it is trading with informed decision, with information that you gather on the chart, with the candlestick, with the price. That is what price action is, guys. That is what price action is. Now, let's move to the next one. Now, why price action is so dependent on technical analysis? Anytime we see price action, we see that when we are talking about price action, we definitely mention price analysis. Now, it is like how the heart is to the body. You know, when a body has no heart, that means that body is lifeless and the body can never do anything. It can't even move. There's no spirit in it again because there's no heart in it. Their heart is like the engine. So now we need technical analysis when we are talking about price action. And you already know what technical analysis is. Technical analysis is trying to analyze everything that has to do with that is happening on the charts. That is what technical analysis is, and then using it to make trading decisions. Now, we need technical analysis for price action, and then technical analysis, price action is dependent on technical analysis. Now, for the sake of those that are just joining, I've explained price action earlier. I said this is how price behaves, this is how price moves, this is how price reacts. Now, traders try to leverage the actions of price because of their history movements, and then we are going to go into that now. Okay, let me add more people. Okay, great. So you all are welcome. You all are welcome. You've not missed the lot. You are still right on track. Now, the importance of history in price action trading. Price action trading. So, like I was saying, I said earlier that history is very, very important. And you all should understand that when you check your Bitcoin chart, it's very, very easy that you see 2017 price action. You see what 2017 did. You see the bull, you see the end of the bull, you see all stuffs like that, all those history and everything like that. That is what you're going to see. And that is basically what price action is. It deals with the history. Now, the importance of history in price action trading. Now, a lot of chart patterns and candlestick patterns I'll be talking about here today is formed and given meaning because of history. Now, listen up, guys. The events that happen after a structure is broken, or after, let's say, a head and a shoulder is being formed, are given meaning because they've happened before in the past. I hope you guys understand. Now, let me make it clearer to you. When there's a head and a shoulder, that means it's the reversal coming in. For those that know that type of pattern, right? When you see a head and a shoulder in the top of the chart, you know that, okay, a reversal is coming in, and it's possible that that trend changes. Now, although there are exceptions, but most times there are history repeating themselves. Now, because this thing has happened in 2015, it happened in 2017, it happened in 2018. We've seen it happening in the previous, and whenever we say head and shoulder, we are always seeing that the price changes course, the price reverses, it changes course whenever we see head and shoulder. And that is why we can say that whenever the price is forming head and shoulder, whenever the price is behaving that way, we try to predict this, that price is about to reverse. This is the idea behind price action. That is the idea behind it. Is like working with history, even support and resistance. Support and resistance will not be valid if it has not been happening in the past. Support and resistance normally. Okay, now I've talked about that history. Now, I just want to make mention that there are exceptions. That you can say, okay, because it's support and resistance, because it's going to bounce from resistance. It has done it in the past. Now, you now put all your money and then you never even put any stop loss. You are too sure. And then you are like, okay, since it is history repeating itself now, oh, I'm sorry for you, because it's not certain. Crypto is an uncertain market. So why will you put all of your savings and not find a way to manage your risk. It doesn't make any sense. It doesn't make any sense because you said history repeats itself. There are exceptions to these conditions. That's why you see that some patterns print, but they are not valid. That is why. That is why. That is why. So okay, that being said, as a trader, you should know how to recognize and spot when history is about to repeat itself and very well leverage on it. That is basically the essence of this course, so that you can understand when history is about to repeat, when a pattern is about to form, when a candlestick pattern is about to form, when a trend movement is about to form, when a consolidation is about to form, you knowing, recognizing, and then leveraging on it. That is basically the essence of it. Now, price action scenarios. If you want to understand price action very well, then you need to start from scratch. I'm saying this for the sake of the newbies. All of that candlestick formation and anatomy. You need to know how a candlestick is being formed. The open, the close, the wicks, the highs, the lows, how price movements forms a candlestick, and all of that. Now, traders study these candlestick formed charts and make money out of this to form their trading predictions and decisions. These meanings can be chart patterns, candlestick patterns. Now, I'm explaining. You guys should listen attentively here. I'm explaining how these price action scenarios actually work. Okay, sorry, I'm still in this previous slide. So I'm explaining how these price action scenarios, how they actually work, how price action scenarios actually work. Now, let me come again. Price actions can mean chart patterns, the candlesticks, the breakouts, the reversals, the structures, the continuation of trends, and so on and so forth. So that is why you hear something like that is a double bottom form, like I said earlier, and then it means you're about to go higher. That means you're about to go bullish, or this candlestick is a pin bar, and then you hear traders say now it's about to reverse, it's about to be a trend reversal, or you hear some saying that they're going to go bullish because of the resistance breakout. That is what price action basically is. That is what it is. Okay, now I won't lie to you. Price analysis is a very, very broad topic. And then I can't cover it all in this Zoom session. I've said this earlier, I can't cover everything all. And that's why I've prepared how you can spot long and short opportunities with some price action scenarios that I'm going to show you guys. Now, guys, this is where it gets interesting. This is where you should focus more. This is where it gets interesting. This is where it gets interesting. How to use price action to recognize trading opportunities. How to use price action to recognize trading opportunities. So I think I'm going to be sharing my screen to a whiteboard. I'm going to be sharing a whiteboard because this is how I'm going to show you how a graphical illustration of this price action. So this part is going to be about if the price or chart does this, then it's ready for that movement. And this is the blueprint to use in spotting the opportunities. You should follow this blueprint that you need in spotting opportunities. So okay. So the first one is the head and shoulder. I'll be sharing my whiteboard right now. Where is this whiteboard? All right. Yeah, so we are talking about price action, and then the first one I want to look at for you guys is head and shoulder. And here is, I hope everyone can see my whiteboard. Now, this is what head and shoulder looks like. Now, most times, the price when it is in an uptrend, price moving up and down and up and down and up and down, and continues this way, we are going to see a movement like this. It looks like a crown. It has the head, it has the left shoulder, and it has the right shoulder. This is just how to recognize it. But one thing, guys, you should know that theory is different from practicals. If you open your chart right now, the candlestick might not move exactly like this, but the most important thing is that you are going to see this head. You are going to see this head right here, which is the top of the price. You are going to see the candlestick with the top of the price. You are going to see another one right here, which is the left shoulder, and then you are going to see another one, which is the right shoulder. Now, how is head and shoulder? How can you use it to spot opportunities? Now, normally it starts from Head and shoulder normally starts from an uptrend line. It starts from an uptrend line. Now, when that price continues to move and then momentum gets to reduce, price momentum gets to reduce, and the buyers are already getting tired. They're already getting tired. People are taking profit. That is how it happens, guys. This is basically explaining the price action to you guys. Now, market is moving this way in an uptrend. Then gradually, people are getting tired. People are getting tired. Buyers are getting tired. Now, sellers are coming in. You know, they've tried it for the first time here. They tried to bring the price down for the first time here, but buyers stepped in again, and then they took the price so high, and then sellers got in again, took the price down, and then buyers did it again, but this time their action is weaker. Now, if the price continues to go this way, you can only call this pattern an head and shoulder if it breaks this neckline right here. If it breaks this neckline, you know, guys, this thing is just like human body. That is why trading is like kind of very simple, because there are these people that have simplified everything by illustrating everything and comparing them to relatable stuff. This is like just like, let's say, a human head, the left shoulder, the right shoulder. Now, the neckline, this is the neckline right here. If the price continues, if it closes below this neckline, then it is about to get bearish. That is you using price action to determine the next movement of the price of an asset. Let's say this is Bitcoin right now. Bitcoin is moving up, and then it forms this kind of signal, and then it's closed below the neckline. It closed below the neckline, and then for it to close below, you know that is your confirmation of a head and shoulder pattern, and know that is a trend reversal is about to get bearish. So the trend will now be forming lower lows and lower highs, which are basics for a downtrend, which are basics for a downtrend. Yes, let's see the next one. You know, head and shoulder also have inverse. There's what we call inverse head and shoulder. Inverse head and shoulder. You know, the first one, the head and shoulder, is a bearish pattern. Now, this one right now, right here, is a bullish pattern. Is a bullish one. Is a bullish pattern. So when you get to see your chart forming something like this, you know, the left shoulder touching that price, you know, you are going to draw this neckline just like a straight trend line on your charts. Now, if it forms this guy, forms a head, goes back up, forms a right shoulder, and then if it breaks this neckline, that is a long opportunity, and that means the market is going up. It's as simple as that, guys. It's as simple as that. But as I said earlier, I don't expect the market to like print it for you this way. And one thing, well, let me tell you one secret, guys. If you want to see these patterns very well, you can change your chart from candlestick to line. Do you get? If you want to see how the stuff has printed is, because that line is going to give you a smooth line and show you how it has formed that head and shoulder for you, either head and shoulder or the inverse head and shoulder. Okay, all right. Let me see the next one from my Zoom presentation slide. Okay, we've talked about inverse. Now, range, the range patterns also is very, very important. It's very, very important. Let me try and draw an example of a ranging pattern for you guys right here. Okay, so let's say we have the price moving this way. We have the price moving this way, coming back down, moving this way, you know, with the support and resistance, movements with the support and resistance, movements with the support and resistance. Now, how is this going to help you to form a pattern? Look at it, guys. If this price here breaks this resistance right here, if it breaks through this resistance, man, that is another long opportunity for you. And if it happens in an uptrend, it means it is a continuation of that present trend. Now, in that instance, it's going to be something like accumulation. It's going to be called accumulation. Newbies, don't worry. If you don't understand all of what I'm saying at once, this Zoom session is recorded on YouTube, and you can always go back to it and watch it and understand it very well again. So basically, what I just explained is price action in a ranging market, in a consolidating market. That is what I just explained. Price action in a consolidating market. The price was coming from an uptrend. It came down, you know, moving sideways, and then it later broke this resistance that is up top here. After breaking this resistance, you can now say that the trend is going to continue. That is the chart forming a pattern for you to follow. These things have happened history, and history definitely repeats itself. Now, if you see a pattern like this, it is definitely possible that it is still going to continue that uptrend. Well, in the other way around, on the other way around, there are also other mostly when we are talking about technical analysis, most patterns you are going to see, they are going to have the bearish part of them also. So that's one I showed you right now. That ranging I showed you right now, it has a bearish part. That's the bearish part. So let's say we have our support and resistance drawn. We have our support and resistance drawn, and then we have our price coming from up top right here. Our price coming from up top, and then you see it moving this way. Okay, so this rough sketch of another ranging or consolidating market I just did is, let's say the market is coming from a downtrend and then it is moving sideways again, sideways. If it breaks this line, this support line right here, it is definitely possible that the price is about to continue to go down more. It's about to continue that bearish state. It's about to continue that bearish state. And most people call this distribution. The former bearish one, I called it accumulation earlier. Now, most people call something like this distribution. And these are just how price behaves that can make you to predict the next move of this price. Now, if I see a candlestick closing below this guy, and then I see the price this way, I know that this trend is going to continue downwards. And then I place my shorts. That is how to spot opportunities with price action, guys. Like I've said, price action is how the price behaves. The price behaved, the price came like this, went back up, continued moving to the right side, and then it breaks down. As long as it breaks down, and then I'm sure I've made all my confirmation with other tools. I'm very, very okay. I'm very, very okay. Okay, let me see what you guys are saying. Okay. I'm feeling you guys. Please, if you are just joining in, don't worry. This Zoom session is recorded, so you can always catch up. But there's nothing like a live class. There's nothing like a live session. Trust me, guys. Trust me. So, okay. Let's see. The next one is going to be I picked Cop and Andu for you guys. Cop and Andu. Let me try and erase this guy right here. Let me try and erase this guy right here. Okay. Yes. So another price action a chart can print for you is Cop and Andu. There is Cop and Andu, and then there is inverse Cop and Andu. We looked at head and shoulders earlier, and right now we are looking at Cop and Andu. We are looking at Cop and Andu right now. Let's see if a Cop and Andu is about to happen. I'm just going to draw a rough sketch. This is price action, and then we're explaining Cop and Andu as how the price behaves for you to make the next trading decision. And then I hope a lot of people are learning. Now, great. So if a Cop and Andu is about to happen, is mostly drawn just like a Cop. I'm just drawing a smooth line for it right here. I'm drawing a smooth line for it. Now, okay, that is it. Now they call this one right here, they call it the Cop. They call this one right here the handle, and then this one is going to be the continuation of the uptrend. That's going to be the continuation of the uptrend. So Cop and handle can be bullish. It can be bullish. It is bullish mostly when the price is coming from an uptrend, and then you see a Cop and handle. That is a bullish continuation. This is how price reacts, guys. This is how price reacts. We've been seeing a bullish movement here and there, and then it comes this way. Please, can everyone see my screen? Zion is saying you can see my screen. Can everyone, if you can see my screen, I'm currently on a whiteboard drawing Cop and Andu. If you can see my screen, send I to the chat session. Send I to the chat session if you can see my screen. I need everyone to be following. It is very, very important. Aha. So basically, this is what a Cop and Andu looks like. And then when you see a pattern formation like this one, you know that the price is about to get bullish again. The price is about to get bullish again. This is how it is being formed. Don't mind my rough drawing, guys. Don't mind my rough drawing. It's just a quick thing I'm doing so that you guys can understand and then the price continues this way and continues to go up and up and up and up. Okay. Great. That is that about cup and handle. Now let's see. Okay, the inverse of cup and handle is going to be opposite of it, and then this is going to be a bearish pattern. You know, when a bear is forming this way, and then you see something like this, that is like cup and handle. Otherwise, when you turn the cup upside down, that is how it is, and then you're going to see this, and the price will continue to go downward. That is basically what it is. Don't mind my drawing, guys. I said it earlier. Don't mind my drawings. So okay, that's about that. Now, okay, the next thing I want you guys to know about price action, the next how to spot opportunities is making use of candlestick patterns. Now, candlestick patterns can also form. Okay, let me see if I can. Let me see if I can share my Zoom slide to you guys right now. Okay. Okay, yes, we are back to the Zoom slides now. We are back to the Zoom slides. We're back to the presentation slides. Yes. Now, right here, if you are going to be using a candlestick pattern to form our trading decision, because definitely candlestick also form trading pattern. Let me just use this guy, not use the whiteboard any longer, so you guys won't complain. You are not saying anything. So candlestick form, and then they are like, they form the activities of buying and selling in a chart. That is how a candlestick forms. You know, when you have a candlestick, you know, something like this. I just hope everyone is seeing what I'm drawing on my screen. When you have a candlestick, you know, something like this, you know, you have here, you have the lower wick, you have here, you have the upper wick, you have here, you have the open, you have here, you have the close. So that is how the price moves. Now, in a candlestick like this, you know, the price actually opened here, and then trading activity went this way. It went up and then came back down, and then buyers took over again. But at the end of the day, the trade or that price later ended here. That is where the candlestick at the close. That is where the candlestick at the close. Now, this candlestick forms different patterns. There are different patterns to candlestick, like bullish Harami, Marubozu. A candlestick pattern can be the formation of only one pattern, like let's see, like is it Marubozu? I don't know if I get that spelling right. And then we can also have plenty of them like that. We can have hammerhead, you can have hanging man, you can have spinning top, you know, and then also you can form two or three can form candlestick chart patterns also. Now you can see these patterns are either bullish or bearish, and that is where that price action comes in. The price action is the way the price behaves, right? Now, you can either behave bearish or bullish depending on that type of candlestick that is. Now, I've mentioned that you can either be bullish and bearish. There's also bullish and bearish engulfing. There's engulfing pattern, there's hanging man pattern, and so on and so forth. In short, there is a video on our YouTube channel that explains more on using candlestick patterns to trade. Now, guys, don't confuse it for yourself. There's candlestick patterns and there is chart patterns. Candlestick is the ones that the candlestick, each individual 2 or 3 candlestick forms on their own. And from there, it is the price action that forms this candlestick. It is how the price behaves. That's why it is price action. Now, there is also chart patterns like the cup and handle, head and shoulder, double bottom, double tops that I've explained earlier. That is what the chart pattern is. Now, the reason I chose this candlestick as the second one I'm going to be telling you guys is because the one of the pattern is more reliable than the candlestick. You know, the pattern is the combination of 2 or 3 or more. I mean, the pattern is the combination of a lot of candlesticks. Now, if you are just using one candlestick to make your trading decision, it is not advisable. And you should note that when you are using a candlestick, it depends on the context that you are using it to. Now, when you see something like, excuse me, guys. When you see something like hanging man, when you see something like an hanging man, or is it spinning top? When you see something like that, let me try and demonstrate. Yes, something like this. Yes, this is an hanging man. When you see something like this in an uptrend, you know, you're having an uptrend this way, and then you see an hanging man right here on the top. It can tell you that this is a trend reversal, that the trend is about to reverse, and that is price action, guys. That is price action. Price action is definitely studying the charts. It's definitely studying the charts. Now, to add to everything I'm saying, let me clear all my drawings right now. Now, to add to everything I'm saying, there are actually some technical indicators that you can use to support your price action. You can use it to support your price action. Now, these technical indicators, they are special indicators that are calculated based on price actions, what the price is doing, what the candlestick is doing. That is it, guys. They are based on what the price is doing, what the candlestick is doing. That's what they're based on. Let me see that. Okay. So these they are based on what you see on the price chart. And the example is a moving average. This indicator example is a moving average. When you see moving average, my favorite, I've always said, is 20-day and 50-day moving average. When you see the two of them together, you know that okay, you can use them to make informed trading decision. And then also you can use the 50-day moving average. Let me open my trading view and show you guys live and direct. I like practicalizing and then showing the illustration of things so that people can get to understand easier. Let's see, give me Bitcoin US dollar. Okay. Bitcoin US. Yes. Long charts. Bitcoin US dollar. And presently, this is a 20-day and moving day and 50-day moving average right here. I think okay, this is a weekly time frame. I prefer 1 day. Yes, great. I like this now. Great. So my drawing is clean. My drawing is clean right now. Now, there's also one thing about price action I need to explain to you guys. You see, mostly when you're trading price action, you want to use these guys, this 20 days and 50-day moving average. Like I've said earlier, the 20-day moving average is the blue line, the 50-day moving average is the red line. So you can use these guys to determine your trading decision. Now, one thing is that if you want to use these moving averages, if you want to use them, once you see that the price is currently still touching this guy, you can take your long opportunities from the price touching the 50-day moving average line. You can see it is in an uptrend. Anytime the price moves close or is touching that line, you'll be very, very good when you are in a long position. And if it is in the other way around, in a bearish scenario, you can as well do the same thing. Let's take it back to these guys. Now, see the first one, it's got close to it here. If you take a short here, you'll be in profit. It came close to it here also. Look at this side also. So that is it about using that. And then there's also stochastic. And that one is also based, and then RSI too. RSI too is also based on using price analysis. It's also based on using price action to spot and see trading opportunities. So if you have any question, you can start sending them in right away. If you have any question for me. So okay, the next thing on my Zoom slide is the trends. Yes, you can also use these trends to spot the price action. You can use them as a tool. In fact, this price action is very, very broad, and then I don't expect everyone to like get it at once or something like that. So that is why this Zoom session is recorded, and you can as well go back to it every now and then you need it. Now, let me tell you guys a secret about using trend lines. Now, you guys should stay tuned and listen to this. This is like a premium secret. I'm about to share. It's like a premium secret. Now, watch this. I've said it earlier. Price action is basically you reading what the price is saying, what the candlestick chart is saying. Now, look at this, guys. Let's say I'm drawing my uptrend line from this guy to this guy. Your line must be at least touching. I think I need to remove these enemies now. Yes, your line must be at least touching. Yes. Aha. About 2 or 3 this thing. Now, look at this. Look at this, guys. This is how you can use trend line for price analysis. We can see that this is how the price is behaving. The price is in an uptrend and it is touching this trend line, telling us that it's still in an uptrend. You know, each of these moving downwards is like buyers are taking profit. I mean, sellers are taking profits right here, and then the momentum is getting low. The momentum gets low most time. Now look at this place here. Look at the speed it's used here. Now, good. We've seen that, right? You can see that it doesn't continue upward just like that. Look at what the price is doing. Look at what the price is doing. The price continues again. It moves it this way. You can see that the momentum is gradually reducing. Look at it. Now, finally, it's getting here again. The line is no more straight like an uptrend again. No. Now, I hope you guys are seeing all this. Now, it's moving to this side again. Now, it's turning bearish. The price is turning bearish right now. It's turning bearish. And that's like how you can use trend lines. You can make use of trend lines to analyze how the price is behaving and how you can use it to spot opportunities. Very, very easy, guys. Very, very easy. When you learn this thing, you get to know them. You get to know them. You get to know them. And then the accumulations and the distributions I've been talking about since, you're going to see everything here also. You're going to see everything here. Just open your chart. If you are done with this Zoom session, make sure that you open your chart and then practicalize everything I'm saying. Look for head and shoulders. Look for pattern. Look for them everywhere. Look for them. You can start with your weekly time frame. Now, number one, if you want to do this thing, like if you want to put it in action, this is how you should do it. The first thing you should do is first start with the weekly time frame. Start with the weekly time frame. Okay, let me choose another coin. Let me see Ethereum. Great. Let me see Ethereum. So I've chosen Ethereum right now, and then I'm going to set it to weekly time frame first. Now, my main reason of setting it to weekly time frame is to know the direction of the trend. I can see that the direction of Ethereum US dollar is a downtrend. It's currently in a downtrend. Ethereum US dollar is currently in a downtrend. Now, you don't expect me to be like saying I want to long these markets or something like that now. No, it sounds somehow. You should not trade against the trend, right? That is what we know. Wow, Ethereum is even very, very worst. How many weeks losing streaks, man? Crazy. Okay, let's continue. So you first start with your weekly time frame, and then you move it down to your, let's say, your 1 day time frame to look for patterns. You know, look for candlestick, look for possible patterns that can help you, that you can use to trade. That is it. Now, once you see a pattern, okay, let's say for example now, where is this guy? Okay, let's say for example now, this guy. Oh, okay, let me just simply draw. So let's say for example now, Ethereum here wants to draw a pattern. Let's say it wants to draw a head and a shoulder, inverse head and shoulder, for instance. So let's say Ethereum is already here, and then now it's coming back here, and then it comes back down again, and then it's still continuing that drawing. That drawing is still continuing, and then it forms like this. You know, this is an inverse head and shoulder. Now it forms that Ethereum is about to reverse. You know, that trend is about to reverse. The story is about to change to a bullish one. That is how to see these patterns. Since once you can recognize that, forget it. Your trading is going to be accurate, but not always accurate. There is exception. That's what you should understand. Now, if you want to use this price action, just look for the patterns that you see that are relatable, that you can easily recognize. Now, this is how to easily change your charts to like a line chart for you to easily recognize lines and patterns. Look at it, guys. I'm currently on a line chart. So if I see a head and a shoulder, I can easily recognize it here. I can easily recognize it. See an example of it here. See this head. See the left shoulder. See the right shoulder. See the breakdown. Very easy. This is what I've been teaching, guys. You can easily spot it here. See the head. See the left shoulder. See the right shoulder. See the breakdown, and then the price went downwards. That is it, guys. As simple as that. price action is not harder than this. It's very, very easy. So there are many of these chart patterns that you can see, even candlestick patterns that can help you. But if you want to recognize chart patterns very well, just use lines. Now, if you have any question, kindly ask them in the chat section. And then if you've gained a thing or two, let me know in the chat section also. Let me know in the chat section. If you have any questions, any objection, any appreciation, you guys, if you want to buy our course and then start analyzing like a pro and then calling signals for yourself, and if it's only the signal group that you want, no problem. I'm going to drop it. For those watching on YouTube, I'll drop the link in the video description. So don't worry about all of that. Okay. Now I'm going to be dropping our YouTube channel also, so that you can check there and see the premium information we have for you guys. You can see the videos that we've made and everything for you guys, all readily made available for you. And then we make videos every now and then, every week. CryptoBase Media uploads video every week for you guys, so you can see. So now Aminullah asked, does volume traded a day 24 hours determine the profits one will make while trading futures trading? Well, the question depends on a lot of things, on a lot of factors. Your profit depends on the kind of leverage you are using, depends on the amount of your capital. Do you get? It depends on the amount of your capital. Depends on how much you are willing to risk, how much you are willing to risk to make some amount of money. So that is what your profit depends on. Now, if you want to say you are analyzing, you can even be a day trader, and then you can even be scalping on a daily time frame. So that means you have to use smaller time frames, like 15 minutes, 5 minutes. If you are scalping, Now, scalping is like for taking small profits, accumulation. Now, if you want the large profits, you can use 24. You can use the 1 day time frame. If you want larger profit, as in if you want to view the market in a larger manner, that is what I mean. Not that if you want larger profit, you can as well use a 5 minutes time frame and then trade right now and earn more than what somebody that is trading daily time frame is going to earn in a month. That's why I said it depends on the capital you are using and then the leverage you are using. It depends a lot on that. So you can say you want to trade futures and then use your daily. If you know that you can wait and let your trade initiate and stuff like that, everything is on to you and it depends on you. Now, okay, a cookie for, sorry, I don't know if I got that right. Okay, you said I should do the trend line again. Don't worry, you need to watch it again. This Zoom session is on YouTube. Don't worry, I'm going to upload it on YouTube and then you are going to get to watch it. Just subscribe to our YouTube channel and turn on the bell icon so that you can get notification when I've uploaded the Zoom session. Okay, Brian said, I know we are all advised not to trade against the trend. What if you see a perfect entry point to long in a bearish market? What do you advise? That's what we are talking about. If you see a reversal signal, take it. If you see a reversal, okay, look at what I did with Ethereum. If that actually plays out, if I see head and shoulder, inverse head and shoulder in Ethereum, or I see a double bottom in Ethereum, I'm going to take that trade. But at the same time, trades are uncertain. So at the same time, I know that it is possible it might not go my way. The trend might still continue. The downtrend might still continue. That is how I'm going to set my stop loss. But when you see a sign of a reversal, take it. That is where crypto traders make money. That is how people get to make money more than any other traders. When you see informations like that, that's the essence of this class now. Seeing the price actions, knowing when reversal is about to happen, knowing the structures, knowing the trend lines, knowing all those breakouts. So whenever you see all those patterns, what confirms them is the breakouts. That is what confirms them. When you see the inverse head and shoulder, if you've not seen a breakout through that neckline, don't take it. The pattern is not yet confirmed. That is what they call pattern confirmation. When you see a double bottom, if that neckline is broken, then take it. But if it is not broken, it might just be tricking you. Honestly, the market can just be tricking you. So that is why you need a confirmation. Brian, I hope you get it now. Okay, someone said, what is the best leverage to use in futures trading? Man, no deal. Best leverage to use, it definitely depends on you now. But it's advisable you don't use large leverage so that you don't blow your account quickly. Now, if you don't know about leverage or you are confused on the 5 times, 20 times, and then maybe you've got liquidated a number of times and then you don't know why. There's a video on our YouTube channel explaining that's like the video's title is how to trade on Binance futures. Just check that YouTube channel. You are going to see it. I made a video about telling you everything about. In fact, if you are just beginning with Binance futures, you are going to understand it. Now, there I explain how that leverage works, how the 5 times leverage works, how the 2 times leverage works. So, do you understand it now? So, you are the one to determine your leverage. And in a market that is uncertain, make sure that you use low leverage. Just take it easy on yourself. It is greed that makes you use 100 times, 120 times leverage. I beg. Down small. Just do it small. Adedamola, I hope you understand that now. Okay, and for our YouTube channel, just click that link, subscribe, turn on the bell icon, and you get notified when this Zoom session is uploaded, and also when we upload new videos on our YouTube channel. So thank you very much for tonight's session, guys. Thank you for staying around. Thank you for sticking around. Thank you for listening to this class. See you next week, Saturday, same time.